You got 9? Yeah, okay. All right, good morning, everyone. We'll just call the meeting to order for the Finance Committee for May 2nd, 2022. The very first thing is we're going to approve the minutes. I know there's not a link here, but I believe it's March 1st is the date. And
So moved.
I'll second that.
yeah, okay. We'll make sure that those are posted or linked to the account. Anyways. Okay, so we have a pretty busy agenda, so let's go ahead and just jump right into it. We're going to talk about just presentation of Grand Park finances and valuation methodologies and structure of the RDC note of $6 million. Chris, will you pull up what I emailed you this morning, please, on Grand Park? We're going to walk through and talk, and then we can talk openly about this. And then, so this is just information for taxpayers. It's really just information that's pulled from the RFP, and then we pulled some information from the clerk treasurer's office that finished up the year, December 31, 2021. So we have revenues, expenses, et cetera. Just go to the next slide, please, Chris. That's So in the RFP, just going through the balance sheet, initially when I went through when I went through Grant Park, is what I did is I created a P&L and a balance sheet, and just to let everybody know. And I went through it and I thought, man, this is it's too cumbersome. One, people may not even pay attention to this, but it might be just a little bit easier to read and a little more plain English. So, we looked at the assets, or I looked at the assets, and I went through and just some things of note. We're pricing the Grand Park Event Center about $80 a square foot. We're pricing the ponds, and obviously, we have to have certain probably retention ponds, but it's kind of interesting. We priced the ponds at $244,000 per acre, which really didn't make a lot of sense, quite frankly, and there's quite a few of them. And maybe even represents 10 to 15 acres. Unless we're going to start holding fishing derbies or something to create revenues, I don't see that as probably accurate, but it is what it is. The concessions stands are priced at $284 a square foot, which seems a little excessive. We don't necessarily see P&Ls on the concession stands. And I presume the RDC doesn't either, whether they make money or not. I've gone back through the minutes. I haven't seen anything like that. So it seems a little bit odd. The valuations that are put into the RFP are given by the city. I'm not disputing those. It's just kind of interesting how we're coming up with those. And then we're pricing the diamonds at $475,000 per acre. And if you look at each baseball diamond or softball diamond per se, and the revenues that can be generated off of that, I think a lot of it will kind of come to this realization on the next slide. But just going over to depreciation, in the RFP we don't show depreciation. Everybody always says, well, we're a municipal government, we don't have depreciation. It's absolutely absurd to think about it that way. Everything, if we're making money for the city, we should be thinking about depreciable assets. We do the same thing with everything else. At some point, assets become tired, old, and we need some things new. So if we don't have replacement funds for those depreciating assets, we still have to understand what those depreciable assets, when they'll need to be refreshed. All I did is use the tax code. So for instance, like the Grand Park Event Center, 27 and a half years, our depreciation would be about $1,096,000 per year. We have additional maintenance of tiles, which are underneath. Obviously, if any of you grew up in a farm area, tiles do break down. You have to replace those tiles over time. We've already seen actually out at Grand Park, even on the turf. So for instance, they redid the turf on, I think, diamonds 5 and 4 on the infield because they become old and tired. So there's additional maintenance beyond what's in the RFP. We have there's different things saying, there might be maintenance of a building or something of that nature, but I think we need to look at it from a standpoint of, the overall collective Grand Park. Depreciation on the concessions are about $150,500 a year. Diamond's about $1.3 million, and the parking lots are depreciated at 39 years. And if anybody's ever been to a parking lot that's 40 years old, I think you'll find that it's not in very good shape. So generally speaking, parking lots get repaved about every 20 to 25 years. You can crack seal them, do whatever, but I've talked to a couple people that are in the asphalt business, and they said parking lots, depending on the strength that they put the asphalt in, it's just like in concrete. There's different strengths of concrete, different depths. But typically they said parking lots, if you can get 20 to 25 years out of them, you're in pretty good shape. And that might be even tough. But I did it at 39 years just to be conservative and said, hey, let's say we just have the diamond collection of parking lots. So we had depreciation of $413,000. Just some notes on our liabilities. When we're looking at our balance sheet, those notes, I went through and read the notes. They are non-conveyable notes. That means if I wanted to buy Grand Park, those notes, I cannot assume those notes. The notes are made on behalf of the city. The city has to pay them or pay them off. If I buy it, I can actually pay the city, but I cannot assume those notes. The liability still stays with the city and our obligations thereof. Okay, $6 million is owed to the city. It's not included on the RFP. Cindy Spoljaric's brought that up numerous times. That's one thing we need to get a hold of and get a grip on and actually start paying that back. There's obviously things that the city needs, and we've been talking about, whether it be infrastructure downtown. That $6 million would probably come in handy. One thing the RFP does not allude to that obviously will probably get mentioned maybe in the next round is contracts with third parties. So for instance, you have contracts with bullpen tournaments. Bullpen has maybe whether they're on a 5-year and a 5-year automatic extension at their discretion, that has to be taken into account. So I think we've gotten out a little bit over our skis here, and I think the RFP there's clearly some inaccuracies and some things that aren't discussed in there. From the equity standpoint, once you get down to it, there's unrealistic equity in Grand Park as depreciation has not been accounted for, nor any replacement values, valuation principles of best use of assets. I just want to talk about this really quickly. In our company, we do about 20 to 25 valuations every month on companies, varying in size, companies going public, whether it be stock options, buy, sell, estate planning. We've even done whether you like this or not, President of the United States, his brother's businesses in Tampa. So we do a lot of valuation work for some high-profile people. And I will tell you this, in every valuation that you perform, you have to look at the best use of those assets. And frankly, if someone were to buy Grand Park, they may look at the Grand Park once we get through all this and say, the best use of this land is to actually bulldoze this thing and tear it down. I'm not for that, obviously. But I'm just saying the best use of assets is how you look at a valuation. Okay? So for instance, if I had a business and I had 10 cars in that business, but I'm not making any money and 5 of those cars are sitting idle, is it the best use of those assets is actually to sell them and give them to someone else because there's no return on my assets. So I just want to just bring that up briefly. And then again, liabilities extending for contracts. And there's multiple liabilities extending for contracts with third parties, et cetera. Okay, next slide. Well, then we can just discuss this in general. From the income statement side, one thing that, just kind of going through the revenues, the ad and sponsorship obviously has a lot of opportunity. I think it's interesting that I think we received more ad and sponsorship revenue from the high school off the football field than we have of all of Grand Park. There's obviously quite a bit of opportunity there. The hotel fees, the capture rate. So I went through the hotel fees. And I went through all the teams that at least that I know are coming through on the baseball side. I'm not so sure we're capturing all the hotel fees. And I know we say, well, people we're paying someone to do this or that. I still think there's some money there that we're not getting. So revenues were about $6.146 million, expenses of $3.37. So earnings before interest, depreciation, and amortization is 2.7 million. And this is something that we always, like to tout and say, oh, we're making money at Grand Park. Folks, I don't care whether we make money or not, and I've said this in meetings, in city council meetings before. It is meant to be an economic driver, and that it's doing. But if you add in, if you just go over of the no interest of approximately 2.7 million, so we're not even talking about depreciation of the 2.9 million above in the expense column, it is not making money. And that's okay, but this is for the taxpayers to understand that Grand Park does not make money. It's okay, but we need to quit saying that it makes money. We need to just be honest with ourselves and say it's meant to be an economic driver. And anyways, so there also in the expenses for past years, there may be some inaccuracies due to lack of wages and correct allocation amongst those expense allocations. I'm not sure exactly what the exact amount is. I just know there are some things that are not included. From the cash flow standpoint, the one thing, and these are positives, Grand Park provides, there's no doubt that Grand Park has been an economic driver. And I've seen different numbers, and we could even say, well, it's, $1.5 billion of assets, and it's generating 25 million in tax base, right? So from that standpoint, it is cash flow positive to the city, but Grand Park on its face is not. So let's just be honest about it and say to the taxpayers and say, look, we are getting tax revenues from Grand Park. That's fair, and that's working out. Maybe not as fast as what we had hoped or intended initially, but we are cash flowing if we want to include in the tax base. Now again, that tax base goes to many different areas, whether it goes to police, fire, schools, et cetera. There's a lot of different money going to different things there. But that all can be debated. The economic benefit has not been realized only to the extent that debt is paid. And what I mean by this is if you look at Grand Park, there's a lot of things that are not built up yet. Obviously, we have some infrastructure issues with the roads and people complaining. If you're on social media, people are griping about the traffic and so on. But Grand Park is not built out yet. And I'm going to come back to that here in a second. But I just want to make sure that when you look at Grand Park, there's definitely areas that can still be built out, okay, and maximized on the tax revenue side. Cash flow should include principal payments of debt, approximately 3.75 million. So again, even though that's not an expense, it's money we borrowed and it's cash flow out of our pocket, okay? And actually that number actually increases over the years. Just analysis, it does not cash flow. Risk to the city is non-operation of our most expensive asset. Clearly we've put a lot of money into Grand Park without realizing the full economic benefit of Grand Park. We need to make sure that we understand what those tax revenues can be or will be in the event that it's sold or that we maintain that asset. Capital improvements, if you look at the RFP, they're $1 million to $8 million per year. You could argue and say, well, maybe that accounts for the depreciation, but actually if we're only going out and showing about a 5-year allocation of capital improvements or even 8 years, it doesn't capture the depreciation of the park. And then the best use of the asset is a city-owned asset. A fail of the park would reverberate to a deterioration of the city's tax base. All I want you to think about is Lafayette Square Mall. Think of Lafayette Square Mall. Well, it's been built out, right? And I'm sure it created a big tax base for them initially. I mean, there's all kinds of restaurants. Go down to, I own a Kia Telluride, right? So, I mean, I go down there to get my oil changed to Ray Skillman. Man, there is nothing around there. It is terrible. And actually, that is a deterioration of the tax base. And I want to make sure that we understand that Grand Park, without building out, we have not even captured our tax base, and I think it'd be odd to go back the other way. If you go to the next slide, Chris, please. So just kind of a summary, we owe nearly $80 million in debt still today. Selling for anything less than this number is a taxpayer burden. all right? I think, that's pretty tough to argue. Grand Park cash flow is negative. The city is still relying on its economic driver for tax revenues. I think these are all just, maybe hopefully somewhat factual. The city has claimed a $200 million net worth. I don't know. I think that's probably a bit off, but a sale of $200 million will generate $4 million in taxes annually. If it's a for-profit business, it's just make some assumptions, but again, I think generating $4 million in taxes annually is probably a bit short-sighted if we're going to lose maybe half of our tax base in deterioration. I mean, could you imagine if Grand Park becomes Lafayette Square Mall? And I would even say there's other places like that around as well. But once things get built out, if you don't refresh and renew, then I mean, I'm pretty sure that places that built out with the expectations of Grand Park being a first-class amenity would not probably stick around that much longer. So, our youth sports relies on Grand Park to facilitate a place to play. The risk of default is large if we sell it and rely on an outside party. Our restaurants and the tax base we have developed relies on Grand Park bringing in people for sales and use tax. A facility with old and tired assets will likely succumb to the next Grand Park. There's already been people that said, hey, we're going to build a Grand Park, even in our state and states around us, right? Some of them have actually scrapped those ideas because the cost is too great. But if our asset becomes old and tired and we don't control that asset, then who's to say Auburn doesn't build the next one and pull everybody in from there? Okay, and I will say, to give the city credit, Grand Park, albeit expensive, I'm sure it has had something to do with some of the corporate entities that have come to Grand Park. It's the whole aura around. I'm going to say Grand Fork whiskey. I can't. West Fork whiskey. Anyways, you know which one I'm talking about. Those wouldn't even be around. Those probably would not be around if we didn't have a Grand Park. Same with Urban Apples and probably many other places. So, anyways, Scott, Joe,
Troy, I'd like to ask a question about transfer of debt. And what you're saying is that certain people that we owe money to, who have paid for projects out here, would not accept payment from anybody else but us. Is that correct?
well, the bond holders, if you look at the notes, all I'm saying is that debt cannot be assumed. So, for instance, maybe I don't think they do it anymore, but at one point, mortgages could actually be assumed by a person buying a house a long time ago. Anymore, you can't do that.
So let's say if Elon Musk comes in and buys this, the Westfield we still have to carry the debt because he can't assume it.
That's right.
Well,
But he could put up a big Twitter sign and
yeah. Well, the thing I'm thinking about, though, is why even put out a request for proposal if the debt cannot be assumed? That sticks us with a heck of a load with no way to retire it, none. I just think I didn't realize that the debt was unassumable,
right.
but you say it really is.
No, it's on the good faith and credit of the city, actually. Jeremy, you have something?
Yeah, the only thing I would add, though, is if it were to sell, we could utilize the proceeds from the sale to pay the debt. Now, some of those debts, those bonds have call dates, so it may be a few years down the road, but it's not like we would carry that debt in perpetuity until it's paid off if there was a sale.
That's true, but what if it was just,
$20 million.
what if it was less than
If
what
you think,
thought?
I think is what he's saying. Like, if you think of the cap rate, a capitalization rate is, by the way, the amount an investor would be willing to accept if they bought an asset, right? A return on that asset. And if you look at Grand Park and say, well, it's a negative performing asset, if I'm not getting the tax benefits that the city's receiving, why would I even buy it? So if somebody's going to buy it and they're going to pay 10 to 20 million, we're still left on the hook with not only the principal we already paid, but also the debt that we currently have. I'm just saying the cap rate doesn't make sense. Even if you go to a real estate 5.5% cap rate, which what was, that's still only I mean, it just doesn't make sense.
Understood. And I guess the only comment there is statute would not allow us to sell it for less than the average of the appraised value of the assets, which is the physical asset.
Yeah,
We've ordered those two appraisals. We don't know what they are yet. But not only would we not sell it for $20 million, we wouldn't legally be allowed to.
yeah.
But that's a pretty dark cloud to have over your asset. I mean, if
Well-
that's true, we might be lucky to get 80 million out of it.
Well, he's saying that, we couldn't sell it for less than 200 million. So basically, we're going through an exercise of putting this information out there, and nobody's going to pay 200 million. That's what I'm saying.
I
If
don't
somebody's
think,
willing to pay 200 million, man, I throw in my house with it, because they're willing to maybe pay 20 million for that. I
yeah,
mean,
and the process will show it, whether
Yeah.
or not it's
yeah,
viable.
I just think, excuse me, first of all, thank you for putting this together and kind of walking us through this.
Yes.
I think at least from my perspective, I know that with the announcement of the RFP, there were a lot of questions. That was something that I know I personally was getting a lot of questions on, and I think it's important. This isn't about, is Grand Park a great idea? Is it a terrible idea? Or are you somewhere in the middle? It's not about that. It's about, we have Grand Park. Are we utilizing it to its fullest ability? And is it something that we're, I guess as we make decisions moving forward as a city, excuse me, we have to make sure that we're doing that and taking everything into account. And just from that perspective, I think this is very helpful, for sure.
yeah, yeah. I mean, I think that that's why we're doing this, is because people are asking us. I mean, even Sunday, I mean, I'm sitting there, and 4 people asked me, said, "We're selling Grand Park? Why are we doing that?" I said, "Well," they said, "Why'd you guys do that?" I said, "Well, we didn't do anything. The city council is not in charge of this." I mean, but people want to know what Grand Park is worth, what it's generating. We've never really seen that in black and white numbers. Not that this does that either necessarily, but I think it's just something that the taxpayers paying for something should know what it's bringing in to the city, what our expenses are, what our balance sheet and income statement look like, and what they're on the hook for, what our intentions are. I would say, I mean, I do think Grand Park is successful in certain aspects of bringing in, tax base. I mean, I would not say that it's not. I just think we need to look at it more from a big picture. And I would hate to see, well, first of all, I'm pretty comfortable knowing that nobody's going to pay $200 million for the asset, or even $100 million for the asset, unless we plan on bulldozing the place and putting up something else, which I think would be a big mistake. But anyways, that's pretty much all I have. So, okay,
I think you have to get 2 appraisals too. You can't just get one and say that's golden. 2 appraisals are necessary, and then average the 2.
Yeah, you're correct. That's what statute requires. And we have 2 appraisals ordered from 2 independent appraisal companies. So they're in process.
and Jeremy, obviously that's expensive. I mean, commercial appraisals are expensive, right? I mean, why would we go through that exercise if nobody's even going to come even close to what we even $100 million?
I guess I don't know the answer to your question, other than we don't know what the value of Grand Park is unless we go through this process.
But that's what I'm saying. But why do we even need to know? I mean, let's just, for argument's sake, let's say it's worth $100 million, all right? Or we say put it on paper $100 million. Do we need third-party verification? Do we need to pay $50,000 to $100,000 in commercial appraisals when we can take that money and use it elsewhere in the city?
That's a fair question. I will say that there is a fair amount of interest. Obviously, you saw in the Indianapolis Star, there's 16 people, groups that filed the intent to bid, or intent to propose, I guess. 2 of them didn't make the deadline, so there's really only 16. But those folks are spending a lot of money too, so they're very interested. And make no mistake, if someone is buying Grand Park, they're buying it to be able to invest in it and grow that business. And maybe they're not making a ton more money on events and tournaments. Maybe they're making money on their developments around the park that are drawn in and capturing the tourism.
Yeah, no doubt somebody's buying something to make money off of it. Yahoo
Yeah.
bought American Online
Sure.
to try to make money off of it.
Right.
AOL didn't pan out, so they wrote off nearly $1 billion of goodwill. Companies have that ability, but we're talking about physical assets. Again, I would just point back to that, we don't want a deteriorating asset for our tax base.
Here's the other thing too,
Understood.
Jeremy, anybody that's gonna buy this is gonna say, I wanna see the books. I mean, that's a normal question. If you're
Yeah.
gonna buy a large enterprise, I wanna see the books. And I hope we'd have sufficient information, because we've never received it, that's for darn sure, to determine whether this is profitable or not. And they're gonna make the same decision on their own, not from us, but on their own, so they're gonna wanna see the books. And our rules of business being followed. That's what probably they're gonna try to determine. And if they're not being followed, can this be successful if they are followed? So I think we have to really, we've gone through a process here of putting out this request for proposal, and I don't think it needs to be a stalking horse, it needs to be a real thing, because there are gonna be a lot of questions asked.
Yeah.
We're getting them already.
I think that's,
That's the point.
yeah, right.
We're getting lots of questions, as, city council, and we're doing the best we can to answer those questions. Obviously, we weren't involved with the process as far as, hey, there's gonna be an RFP. So we're kind of trying to get to that point where we can provide answers to some of these questions, so.
They're gonna have to trot it out better to these people than it's been trotted out to us.
I just think,
That's for sure.
I think as a city, and by the way, Jeremy, look, I will say this, you've done an awesome job since you've been chief of staff. I mean, I'm not kidding you. And if anybody has any inkling of that there's any animosity there, I think Jeremy's done a fantastic job. I mean, we're going to even see that even further. We've gotten more information, honestly, in the past 3 months than we did in the last 2 years, frankly. I mean, it's a breath of fresh air, quite honestly. With that being said, we shouldn't do RFPs for the sake of doing RFPs, just to test the waters. Because when you do that, it's like putting your it's like putting your house on for sale just to see what I can get. I'm not interested in really selling it. I just want to do it. And I do it every year, and I do it every 3 years just to kind of see where it's at. After a while, people are going to look on the MyBore and they're going to say, well, these people they're just kicking the tires down the road. These guys aren't even serious. This is not a serious business, idea. So just think about that. I mean, whether it be for this or any other RFP that we put out, if we're going to do an RFP, we should be serious about it. And we should have at least have an analysis to say, hey, this doesn't even generate $200 million. If somebody comes in, to offer $200 million, man, I will sit up here and eat crow all day long. But, that they're going to run Grand Park just the way it is and pay $200 million for it.
One slight point that I would add to that. First of all, I agree 100% with everything Troy just said about the communication and the information that you've shared. I appreciate that. It truly is a breath of fresh air. Maybe, and to follow up on the second point, maybe an analysis, I'm assuming an analysis has been done that says, hey, here's what a successful process would look like internally. If that is the case, maybe that information that is there, that's already been done in advance of issuing the RFP, could have been shared or should have been shared, at least with the council.
It just gets vetted.
Yeah. That's the only point that I put on there. I'm not trying to, beat you up or anything like that. But if anything has been done in advance of this, just sharing that, those targets with us would have probably eliminated this process because, again, we're getting inundated with questions, and we're trying to address those the best we can.
Okay. And that's fair and noted. I will say this isn't just an exercise. We are serious about this, assuming the right proposal that aligns with our plan, I mean, which would leave Grand Park as Grand Park, it would still be the economic engine for the city of Westfield. It would just be able to blossom with some private capital investment is the intention.
Okay.
So, and, you know, we do have, or we are assembling a proposal review board, a review committee, and I was thankful when the council nodded you to be on that, and hopefully you'll,
It's okay.
you'll be there. Because this isn't gonna be fast. June 22nd is the deadline for proposals. We are getting really great questions. I say we, but really Taft is managing those questions to ensure that it's handled appropriately and in line with the laws. And once we get to that June 22, that team of folks, I will be the owner's rep, so I'm not on that review board, but I'll be involved the whole time. We can dig into those things and see if see what's best for the city.
Okay, yeah, fair enough. So really, the last thing I had on here, Jeremy, under this was the $6 million owed to the city. We need to, if we're gonna go out and talk RFPs, we need to address the $6 million. We need to set it up on a payment plan. We need to get it back. I mean, because that $6 million, as we've gone through this whole ARPA thing, I mean, there's a lot of things that we could be doing with that $6 million from a downtown perspective.
Sure.
And I mean, the fact that no interest is accrued on that the taxpayers have basically loaned money for $6 million, and now we're talking about suing it, but we haven't even spoken one iota or even in the RFP about paying the $6 million back, is a bit of a slap in the face, I think, to a lot of people. And I wasn't on the council when that happened, but the fact that it hasn't been addressed, whether it be by the RDC or RDA or whatever, is a bit absurd. The $6 million should be on an amortization schedule, should be paid back to the taxpayers immediately in some fashion.
And Cindy Spoljaric and I met about that, I think it was last week or the week before, and essentially what we discussed is she's going to bring forward the resolution that approved that loan, we'll call it.
Yep.
For some sort of update and then a reissuance to you all for a repeal and replace of that. And she's proposing that there would be repayment terms in there, and I don't think anybody's opposed to that.
Okay.
We just got to do it in a manner that doesn't completely hinder our ability to reserve capital in Grant Park to reinvest in the depreciating assets.
Yeah. Okay. I haven't.
It can make,
I know she's mentioned it a few times. As you know, we can't all get together and talk about it
understood.
privately, you know, so, okay.
But that conversation is going, is what I wanted to let you know.
Okay.
Thank you.
Thanks, appreciate it. Okay. Let's go on to the next thing, the budget versus actual review and discussion of variances for 2022. And I just have the spreadsheet. Jeremy, if you want to kind of walk through these, I mean, is that how you want to do this? I mean, and first of all, let me say, again, this goes back to what I was saying earlier. This is the first time we've actually received anything on budget versus actual, and I thank you for that, because I can't, we asked for it numerous times. We passed an ordinance or resolution, I don't even remember which one, saying that we would do this in the past, and it was frankly just ignored. And you know, having an actual working budget is essential to any entity if they're to be successful. And so, number one, I've just kind of read through it, but I thank you for actually, you know, putting this together. If you want to just kind of walk through these things.
Do we have it posted anywhere?
I can email it to you if you need it, Chris.
Sure.
And this is what Jeremy sent us.
Yeah, it's the one we all updated.
Let me pull up my email real quick.
Because this is a presenter login, so it doesn't have access to anything.
While he's pulling that up, I take a minute and again publicly say thank you for that, because again, it's exactly what we were asking for. Just a couple little footnotes off to the side. It's all we're looking for.
And I will acknowledge that I didn't do all this myself. All the department heads all weighed in. They all manage their own budgets and
Sure.
have all invested some time and energy in this. It was a little time consuming this first round, but it'll get better for us as we continue to move forward. Essentially, for the public, what we did was take the report that Misha runs out of the NAV,
Yeah.
jet report, and just added comments to kind of explain.
This report's where you took the stuff.
Yeah, it is that report with a comment section added.
Yeah.
Um,
And this is good, because this way, the counselors can read these things, and when we go through our budget process at the end of the year, everybody can be on the same page, you know, so,
And it's something they've tracked
Yeah.
throughout the year. It's not just a surprise at the end of the year or
Right.
towards the end of the year.
right.
Understood. And I hope you all know that internally, we are all tracking these things all the time.
Yep.
It's just never been in this format, and we can certainly continue to do this if this is what works. I mean,
I like it because it's the taxpayers' money that we're working with, and I mean, that way they can know what we're actually spending money on, and where we're under, over, et cetera. So,
and maybe in the essence of time, as if there's any specific questions. So as you can see here on the list, I'll just kind of walk through this sheet for the world. These are the appropriation numbers, so each fund has its own appropriation number. Admin, we'll talk about it, is 101, 001, 111 for things like salary, and then all, as you can see in these different lines, have different appropriation numbers that all have an associated budget. So essentially, this is the first quarter budget. It's the annual budget divided by 4. And as you move across the sheet, you can see what has been expended this quarter, and then year-to-date, obviously, this is first quarter, so they match. And then what percentage of the budget was spent for the quarter. So you can see percentage-wise if we're over or under budget.
yeah, and Jeremy, just for instance, like on that first thing there, I mean, if Todd was being paid out of the Westfield Fire Department,
Yep.
why don't we do an allocation then and take that money from WFD and put it into the administrative side now, so we don't have to do it later?
And I would defer to the clerk on that.
Why would we even need to pay Jeremy out of fire?
No, we shouldn't.
Right.
Right.
That's what I'm saying.
Okay, yeah, next year, just, you'll be paid out of admin.
Yeah, so we will appropriate it all into admin, but we will need to do an additional appropriation at some point in this year. It can be sooner, or it's kind of on Cindy's timeline, because she's the one that really does the work
Yeah.
associated with that.
Okay. Sorry, go ahead. I didn't mean to interrupt you.
But yeah, for my comments, that's the overage associated with salary and perf. Todd was in the fire perf, which is different than I am. I'm a civilian employee. And then one thing worth note here is this in the legal consulting, $83,000 roughly was a carryover from the Baker Tilly audit from last year, invoices that hit in January. So that shows an imbalance there. I did have a question for Cindy on that. If it is encumbered in this case 2021, spends in 2022, does it apply to the 2022 budget, or?
If money's encumbered, I was never notified because we.
And I don't know if it was. It was just a general question. Okay.
Nobody ever notified me to encumber any money.
Okay.
So if it wasn't encumbered, then
We're just cash basis otherwise, right?
Yeah. So there was essentially there was no PO established. Okay. So that's another thing that we'll fix, obviously, moving forward, but there may be some additional appropriation necessary for legal services, which is another larger topic that I'd like to talk about at another finance committee meeting, about how our legal costs are currently being appropriated. Right now, all legal services for the entire city, RDC, Plan Commission, everything hits the admin legal budget. Well, 90+% of those things aren't admin. So I would like to see each different
Yeah.
budget have its own legal line so we can track where those expenses are going.
I'm all in. Yeah, that's good.
And I've worked with Taft a little bit on that. I think it's something we can do pretty simply, and it'll tell the story better than just a big bulk number. Because Public Works, for example, spends a ton of money on legal fees for land acquisition, development agreements, all these other things. Likewise, the RDC does. Plan Commission has spent some. So just holistically, I'd like to have that conversation later down the road when I have all the ducks in a row. Some of these others, we pay $105,000 a year to Hamilton County for the youth assistance program. So that $105,000 invoice was paid completely in this first quarter. So as you can see, we're a little over budget on that one, but it'll balance out as the year moves on. And then as we move down, if you have specific questions for the different departments, or if you'd like them to come up and talk a little bit about their comments, we can do that. However you want to do it. I just want
This is what I would say, Jeremy. I mean, everybody's here.
Yeah.
I mean, if someone has something that they think is different than what was expected, that they could come
it's
up and
noteworthy,
talk to us. So that way, we're not getting to September, October and saying, well, gosh, we need 5 people. And we're like, well, why didn't you tell us that throughout the year? You
Oh,
know,
that makes sense.
That sort of thing. Or we're gonna need X, Y, or Z. Yeah.
Yeah, I don't think, excuse me, the initial request was never for this to be something that was just going to create a lot of extra work and a lot of extra hassle. It was simply for information purposes. So we can go through, we can assess, where we are to date and that type of thing. But if there are items that are noteworthy, whether they're on here or whether they're items that are coming up and you think it needs to be discussed, that's, I think that's the exercise.
Okay.
Yeah.
Well, thankful to Misha in the clerk's office. They did the bulk of the work by establishing the form. So thank you all. Thank you, Misha, if you're listening. So moving forward, it should be pretty simple. I guess I'll open it up to the floor. Do any of you have specific things you'd like to address on your comments? Any outliers or anything? Doesn't appear they do. Yeah.
Yeah. Come on up.
Good morning.
Good morning.
So really, the only thing I wanted to speak of was prior to 22 and 21 in previous years, we did the bond. So we got away from the bond. So in 22, we had $530,000 put in our equipment line
Yep.
instead of the bond. So I just wanted to give you kind of a quick view of where we're at with that,
Yeah.
because that was for our police vehicles and equipment.
Right.
So out of that 530, what's happening is, just like everywhere else in the nation, we can't get our cars.
Yep.
So for everything we ordered back in October for this year, we have not got one car yet. So in turn, what happens is, what we would have had expenditures in first quarter, well, we didn't have any, other than some equipment and our flock system. So you saw maybe $53,000 worth of equipment and a $41,000 for the flock cameras.
Yep.
That's the only thing we have in first quarter. So what I'm saying, basically, probably second, third quarter until you'll see those car expenditures come in.
Yeah. Yeah.
So, but that's in our equipment line. That's the bottom line, which showed, like I said, thanks, Jeremy. Would it be a total of about $530,000 out of their equipment line?
Yeah. And without those vehicles, I mean, I know you'll probably hate me saying this, but we haven't seen, it doesn't look to me like, repairs have gone up substantially either.
Right.
I mean, so it looks like we're actually, I mean, again, not to address the whole automobile issue again already, for this year, but I mean, it doesn't look like we're exceeding expectations. For instance, we wouldn't, I mean, I'm going to use this analogy now. I mean, so like when my kids turned 15, I didn't go out and buy them a car, right? Because they're going to drive when they're 16 because prices are going to go up, right? I've actually heard that at a counselor's meeting where they said, well, we should buy cars in advance, and I'm like, that makes no sense. Yeah. So my kids, when they're 14, I should buy them because they're going to go up even more in 2 years, right? I mean, I'd rather see, when we need them. But it doesn't look like repairs have gone up that much. But
No.
I do hear you. I mean, I know vehicles, I'm sure they're tough to get, right now.
They are. So that's where we're at. Everything, all the other lines are in good shape. Some things, historically, we don't purchase till the end of the year, so, first quarter numbers are going to be off.
Yeah, okay.
So that's all I had.
No, it looks good,
right.
honestly. Yeah.
Appreciate it very much.
Thank you.
Thank you.
Anyone else? So I will talk, not to steal John's thunder, but I'll talk a little bit about the Public Works budget since I created it and left it for him to deal with. There is one piece on here that I did want to talk about a little bit, and it's specifically an MVH. So as a part of the audit and the change in kind of the regulations of how MVH is distributed and what the requirements are, we are required to utilize 50% of our annual MVH distribution on road maintenance is the easiest way to put it. So when you see this $500,000 TSF that was not budgeted, that is a transfer. So it is simply a $500,000 transfer into the MVH restricted fund. So no money has been spent. It was just moved so that we could establish that new fund that has to be completely managed separately from the other MVH. So you'll see that we're far over budget because that $500,000 in this form calculates into it as an expense, but it's not an expense. So, and there's a couple other funds that will have those TSF transactions, stormwater being one of them. I just wanted to let you know that that's not an actual $500,000 expense. That expense was just moving money as seed money into this new 201-024 fund.
Okay.
So that when we do have resurfacing dollars that start coming out of there, that it's not an empty account.
Are we gonna have maybe more expenses than what we expected, Board of Public Works wise with Grand Park traffic? I mean, I know we put up signs, we're trying to alleviate some of those things. And actually, I should have asked the chief this also, just in terms of, getting, I know this isn't necessarily with this, but does it cost us more if we have someone to direct traffic? I mean,
I'll defer.
sorry about that. I know.
Yeah, I'll defer to Joel.
Does that cost us more?
Well, it's not about money, actually. It's more about it being effective.
Okay,
And what happens is we can put people in intersections, and we have been. We've been actually paying officers these busy weekends to be out there. Sometimes they cause too much damage. So what happens, unless you put 50 officers out, you're pushing traffic someplace and causing problems other places.
okay.
It's more important that we get these lights to sync and let them do their job and push traffic.
And we're still working on that, aren't we?
Yeah.
I mean,
Yeah, so.
Okay,
and-
thanks.
And as far as the digital signage and things that you see on 31 and then there's one on 32 telling everybody to go to Spring Mill, that is all part of the 191st Street construction project and the maintenance of traffic for that. So there is additional cost. There may be some minimal additional cost to add some additional signage. But the volume of traffic that we're seeing right now is 100% attributable to the fact that 12,000 cars a day can't go
Right.
from 31 to Grand Park.
which actually, I meant to ask this, and I know fire is here also. You remember like 3-4 years ago, the kid that got hit in the chest? Remember, and his heart stopped?
Yeah.
You guys remember that?
do.
Are we okay on traffic? I mean, in terms of getting in case something like that happens? I mean, I know they have the defibrillators actually out at Grant Park, but I mean, that was actually just one concern I had when I was out there this weekend.
Yeah, so very, very good question. On the average, we know Grand Park is like right across the street, but it takes us anywhere from 8 or 9 minutes to get there. By the time the call is over to the county and they dispatch us, we get the alert and we send the closest appropriate unit. That time hasn't changed, usually because we've got lights and sirens, we push people out of our way, we get there pretty good.
Okay,
And we tend to know, especially on these bigger weekends, and we can kind of plan a route, right? We know they're going to be bogged down at Wheeler and 32. We're not going to go that way.
Okay.
We're going to go a different way to get up into the park. And so this weekend was a busy weekend. We were up there a couple times, and we actually coordinated with the park and had EMS on site, rendering aid, taking care of people before our medic unit even got
Okay.
there. So when there are large tournaments, we contract with them, provide aid to get them up there in the park, to help alleviate some of that problem.
Okay, okay.
Sorry, I'll chime in again too.
Yeah.
Yeah.
So we also, on the weekends that they're as busy as they have been for the past couple weekends, we will staff officers out there also. You'll usually see them on the golf carts, but they also have a bag on there with an AED and
Okay.
first aid stuff.
Yeah, I just thought about that one kid or whatever, so, okay, sorry.
And
And
it's
this is-
happened like
sorry to-
3 different times, not just the one young man that took a shot.
Where they got hit in the chest, or,
It was, a gentleman was singing the national anthem and fell over cardiac arrest. Our folks were there and brought him back as well. So,
awesome,
yeah, it happens, and that's why we have people there.
man, okay,
Thank you.
thank you.
This is Matt, Director Grand Park. Sorry, I'm away from the room now, but we've made it an intentional discussion with a lot of our events to put those policies in place. And with the amount of traffic that we've had, and the nice thing is that those events are taking on those additional costs and paying for those officers out of their budget. So I just wanted to make sure that we were clear that that is not something that we're additionally paying for. That is something that is an event burden expense.
Appreciate that.
Thank you.
And I guess the second part, or Joel might have talked a little bit about it, the signalization of Tournament Trail. It is still a process. John can give us a more specific date, but we've got to get the loops installed, so the communications between the 32 signal and the Tournament Trail signal aren't final yet. Right now, it's just a dummy timing. Soon, hopefully this week, they'll communicate, and that will make that whole interaction much more
Do you guys
productive.
work with like traffic signal company out of Fishers, are they still even around? Yeah.
Hoosier is the subcontractor on that project. They are cutting in signal loops today out there. And we do have to do some coordination with NDOT and their traffic engineers to make sure that the timing of the 32-wheeler light, which NDOT owns, is still communicating well and functioning well for 32. That's NDOT's main concern. But May 17th is the date that I was given, obviously pending weather, that we would get that dual left signal turned on, bags off of 32-wheeler, and have that functioning.
I got you,
So,
okay.
So just a
about 2 weeks.
question, again, I know you guys will take care of it. I know it's going to work out fine, but as far as once the roundabout is done, up north, is that, and that's open again, is that a long process then to go in and resync that? Because the traffic flow is going to be different at that point in time.
Yeah, so we're syncing it for certainly long-term traffic patterns with regards to the Tournament Trail wheeler light synced with 32-wheeler light.
Okay.
So we're looking at kind of long-term traffic trends for that. If anything, it'll just be an improvement once 191st Street opens up.
Okay. Thank you.
And likewise, this summer, we'll have another north-south gateway into Grand Park, which would be Oak Ridge Road. We'll turn into Grand Park Boulevard north by the Speedway, and it'll be free-flowing, or at least flowing north-south into Grand Park as well. So hopefully that'll lessen the burden a little bit on Wheeler Road. That was always the plan and intention. And so I guess my only last comment on the budget, unless you all have questions, is I just wanted to kind of show us all where we're at currently for the first quarter. As you can see, the first quarter budget is 7.4 million. We have an unexpended balance, so we've spent 5.8, 1.6 remaining. So we're 21. We're tracking 22% under budget right now.
Awesome.
So thanks to all the leaders that are managing those budgets really well.
Awesome.
Any other
This
questions?
is more information than we've got in a long time. Appreciate it.
Yep. It's no problem at all, and we'll keep it going.
Okay,
Anything else on this?
I'm good. Anybody else? Oh, go ahead, Cindy.
I just want to say something about the encumbrances.
Yeah.
I have to put those on the AFR every year.
Okay.
January, March.
The end of the, okay.
Yeah, so if anybody is doing an encumbrance, you have to send it to me so we can get it on there. We have to know who it's for, how much it's for, and what it's for.
Sure.
We probably didn't even have those invoices, from those folks, in
I
fact, if I
honestly don't
remember
know.
right.
Yeah.
Don't quote me on this, but I think that is absolutely correct. We did not have those invoices at the
Yeah.
time.
Yeah.
I don't, it transacted before I
Yeah,
Yeah,
had
right.
access to admin
right,
finances. So.
just for future.
So, just so I'm clear for me, the way that we, Public Works at least, has always encumbered dollars is through a PO. There is another function where you can actually encumber money. The PO would naturally already have all the information. So if we're just doing a separate encumbrance, that's when we need, okay, that's good to know.
With those invoices, I recall that we discussed those briefly at a council meeting, start of the year, and that there was some conversation. I can't tell you off the top of my head if those were the exact figures or not, but
Okay.
I know we had that conversation, and it had to do with the lack of timeliness in the invoicing.
Okay. All right, let's go to the next thing.
Yeah,
I don't
and
know if you're doing this.
I'm going to turn this over to the team. I think Kevin will open it up, and Caleb will give the vast majority of the presentation.
Okay.
And then we'll go from there.
And just to clarify for everybody, the reason we're doing this is I had made the comment that, we have possibly a sufficient tax base already, et cetera. So we wanted to see kind of where we're at, that sort of thing, so.
Yeah, thank you. Good morning. At the last time we were before you here, you guys had asked some information of us, specifically just to kind of recap, really for anybody listening. We were asked to provide you with the number of units that we currently have in Westfield that are built. We also were asked to provide how many units have been approved through zoning but have not yet been built. And then we were also asked to provide a kind of a 5-year look ahead, 5-year projection of what we anticipate our growth being in the next 5 years from a residential perspective. So in addition to the raw housing numbers that I just covered, you've also asked for the associated financial information related to those housing numbers. So we're gonna present that this morning. Senior Planner Caleb Ernest did the bulk of the work here, and I want to take a minute publicly to thank him for his time and effort in assembling this information. There was a lot of research, a lot of pulling numbers out of other sources that we have it all. It just wasn't all in a good format that we could put it all together, and we've done that. So, Caleb, thank you for your time. I think this was a good exercise for us, and I think if this is on the right track of what you were hoping for from a presentation perspective, I think we'll keep this moving forward in the future as well. So kind of quickly to give you a framework of the presentation that you'll hear, Caleb will start with just kind of a brief introduction, just to get everybody that's listening to this presentation kind of on the same baseline in terms of some of the terms that we use, some of the resources that we use to get some of our data. So he'll explain that. Then he'll go through the numbers, and following Caleb's presentation, John Rogers will come up here and speak regarding the assessed value of those numbers. So I guess in the interest of time, if we could maybe hold questions to the end. I'm sure you will have some as we go through this, and that's okay. But there's also a good chance we may answer it throughout the presentation. So if we could do that, we're happy to take questions at the end. And without further ado, I'll turn it over to Caleb.
All right, good morning.
Morning.
So we're going to cover, as Kevin said, just kind of base terminology. So when we talk about zoning, every property in the township and the city is assigned a zoning district, right? It's assigned or zoned a zoning district. So there's two types of zoning in this case. There's straight zoned and a PUD. Okay, straight zoning refers to a zoning district that was established at the time when zoning districts were assigned to every property. So generally this is, unless it was zoned to another zoning district, there was no third party involved in zoning these properties. So there's no outside party that zoned this. So straight zone can be abbreviated STZ. So examples of this, we have, AGSF1, all the SF1 districts, and multifamily districts. These are all examples of straight zoned properties. So the differences between all those districts that you see on the screen is lot area, living area, setbacks, et cetera. That's what changes in between those different zoning districts. Okay, so here's a map. We have US 31, State Road 32. So all the different zoning districts are pulled up here. So all outlined in blue, these are all examples of straight zoned zoning districts. Okay. Moving forward to planned unit developments. This is either a new or an amended zoning district proposed and approved by a third party or developer, modifying or creating new standards for the property or properties. Right? So essentially it's a set of standards that's overlaid on top of a zoning district. So in most cases, it is created by a third party or a developer. It can be abbreviated as PUD. Examples of this that we may all know is the Maple Knoll PUD, Lantern Commons, Chatham Hills, Bridgewater, etc. Same map, different highlights, Bellcrest PUD, Andover PUD, Sheffield Park, just outlining the residential PUDs. The ones that are not outlined are more commercial or institutional, industrial, etc. So as we move into the actual housing stock, there's two types of units that we're going to be presenting over. Single-family units and multifamily units. Okay, single-family units contain single-family homes. This can be abbreviated with SF. And single-family typically means one unit on an individual lot. So multifamily units can contain apartments, duplexes, and townhomes. Can be abbreviated with MF. And typically, more than one unit is on an individual lot and or within the same building on that lot. Okay, so as we address the different data, it's going to be broken down into 4 different categories. So we've chosen to organize this residential data into 2 groupings, each with 2 subgroups. That creates the 4 categories. So the first group is existing units, and the second group is expected units. Of existing units, the 2 subgroups is 100% built and not 100% built. Of expected units, we have the subgroups of completing construction and construction has not started. So moving forward, we're going to explore each of these 4 categories just so we're all on the same page. So in the existing units category, we have 100% built. These are units that have been built in fully completed subdivisions. This means that there's no more room for any future units to be built in that subdivision. So this category will include straight zone properties and PUD subdivisions. So an example, we have 169th Street and Spring Mill Road. This is on the west side of town. This is Keeneland Park. It's a PUD subdivision. Every single lot on here has been built. It is 100% built out. No more units will ever get built here. Now there is a disclaimer. Some of the subdivisions that were included in this category are geographically built out and are being counted as 100% built. So meaning even though the subdivision was approved for a certain amount of units, not all of those units were or are ever going to be built. So an example of this is Lantern Park. Right, this is Westfield Boulevard and 161st Street, generally on the east side of town. Lantern Park was approved for 60 single-family units. 58 of those units geographically were built, meaning that there are still 2 units that are approved to be built, but there's just no more room to build it. So that's what we consider 100% built out. So that is the case for some of these subdivisions in the 100% built category, but not all of them. The next subgroup is not 100% built. These are units that are built and located in subdivisions that are partially completed. So they're located in unfinished subdivisions. This includes only PUD subdivisions. An example of this is the West Rail subdivision on the west side of town. It was approved for 236 units. 155 units are currently built in that subdivision. 81 units remain to be built in that subdivision. So this subcategory only includes the 155 units currently built. So here is the West Rail subdivision. We have Ditch Road and 161st Street. Outlined in blue is those 155 units that are currently built out in the subdivision. Moving to the next category is the expected units. The first subgrouping of that is completing construction. These are units that will be completing construction in subdivisions that are partially completed. They are units that will be built in those unfinished subdivisions. This includes only PUD subdivisions. And again, same example, West Rail subdivision, 236 units, 155 are currently built, 81 units remain to be built. So for this subgrouping, it's including the 81 units. Again, same aerial of West Rail. Outlined in blue are those 81 remaining units that will be completing construction. The last subgrouping is construction has not started. So this is units that have not started construction at all. They are approved to be built, but they have not started building. It includes only PUD subdivisions. And again, different example, we have the Somerset PUD. It was approved in 2021. It was approved for 152 units. And for this subgrouping, it only will cover that 152 units that have not been built. So here's an aerial. We have 186th Street, and the Somerset PUD is outlined in blue. So as you can see, there is no construction that has started yet. So it includes all 152 units. So just to recap, we have the 100% built out, no more room for units, not 100% built, but is only including what has been partially built. Expected category, what is completing construction, the remainder of that unfinished subdivision, and then construction has not started whatsoever. So before we look at the actual numbers of the housing stock data, it's important to note some averages. So for building permits, we use that as the consistency to measure single-family permits. So here are the different end-of-year permits for the last 5 years. So a 5-year average is about 917 permits a year. So what this means is that in 2017, we received 719 single-family permits that can equate to 719 single-family units, and so on and so forth for the remaining years. So that can be said that on average, there's about 917 single-family units a year. When we move over to multifamily, we use a different way of tracking how many units are in a year. So we switched to certificates of occupancy. The way that this differs from a permit is that the certificate of occupancy actually tracks the exact day the unit of multifamily has been released. It can be occupied. So a single-family permit is typically approved and someone can move in, sell the house, but a multifamily permit may be issued, but it may not be completed in the same year. It can also, again, referring to a building on the same lot, it may have multiple units within that building. Some of those units may be released, but not the entire building is open to be occupied. So this tracks specifically the exact number of multifamily units. So again, here's examples of the past 5 years of units per year. So on average, about 210 multifamily units are occupied. This means that, as an example, 2017, 144 units of multifamily was released, was occupied, and so forth. So moving into single-family units, again abbreviated as SF, meaning one single-family home equals one single-family unit. So up here on the graph, we have 59% of all approved single-family homes have been built in fully completed subdivisions. That means about just shy of 14,000 units are built in fully completed subdivisions. 15% of all approved single-family homes are located in subdivisions that are partially completed. That means that 3,400 units have been built but are located in unfinished subdivisions. 20% of all approved single-family homes will be completing construction. That means about 4,500 units will be built in unfinished subdivisions. And lastly, 6% of all approved single-family homes have not started construction. About 1,400 units are approved to build but have not started building. So what this means is that there are around 17,000 units that exist today. They have already been built. This also means that just over 6,000 units do not exist but are approved to be built. So based on the average of 917 building permits a year, future construction will take about 6.5 years to build. That's 5 years for the expected units to be built, so the units that will be completing construction, and then 1.5 years for expected units to be built for construction that has not started. Moving to multifamily units, abbreviated with MF, and one multifamily home does not equal one multifamily unit. It's actually safer to scratch the home and say one multifamily building, as noted before, because one multifamily building could contain 6 townhome units, could contain 2 duplex units, it could contain 12 apartment units or more. So really it's safe to say that one multifamily unit could equal 1 apartment unit, 1 duplex unit, or 1 townhome unit. When we look at multifamily, 49% of all approved multifamily homes have been built in fully completed subdivisions. That means about 4,000 units. 8% of all approved multifamily homes are located in subdivisions that are partially completed. It's about 637 units that have been built in unfinished subdivisions. 4% of all approved multifamily homes will be completing construction. So about 351 units will be built in unfinished subdivisions. And 39% of all approved multifamily homes have not started construction. It's about 3,300 units that are approved but have not started building. What this means is that there's about 4,700 units that exist today. They've already been built. It also means that there's about 3,600 units that do not exist but are approved to be built. So based on an average of 210 certificates of occupancy released, future construction will take about 17 years to build. That is 1.6 years for the units that are expected completing construction, and about 15.8 years for expected units to build for construction that has not started. So looking at the two categories together, the total of single-family and multifamily, 56% of all approved single-family and multifamily homes have been built in fully completed subdivisions. That means right now there's over 17,000 units of single-family and multifamily homes. 13% of all approved single-family and multifamily homes are located in subdivisions that are partially completed. So just over 4,000 units have been built but are located in unfinished subdivisions. 16% of all approved single-family and multifamily homes will be completing construction, meaning about 4,900 units will be built in unfinished subdivisions. And 15% of all approved single-family and multifamily homes have not started construction, about 4,700 units approved to build but have not started building. What this means is that there are about just over 22,000 units that exist today. They have already been built. This also means that about 9,600 units do not exist but are approved to be built. And again, the averages for each of those that's measured is on the screen there. And at this point, I'm going to turn it over to John Rogers to speak on the financials.
Caleb, can you send that to us, to me?
Was it already signed?
We have it
Did
already?
you send it Saturday?
Yeah, Jeremy sent it over the weekend.
Yeah.
Okay, I haven't looked. So-
Okay, yeah, you should have it in your
Okay,
inbox.
thank you.
You're welcome. John?
Good morning.
Morning.
How do you go forward? Thank you. So the assessed value for all of the approved build-outs, we expect the assessed value to continue to grow faster than the property tax levy. As indicated in the chart here, this equates to an expected decrease in the property tax rate and a lower circuit breaker impact in the future as is part of the sustainability plan. So a lot of the information that you saw today, most of the information, frankly, that you saw today that Caleb's been working on is in the sustainability report. And we are working on the 2023 version right now. And we will continue to use the information from Kevin's group in the sustainability report. So the projections that you see in the revenue side of that report are built from the activities that you've seen on the screen today. I think at this time we'll take questions okay, I guess Jeremy has one more comment.
So I just want to acknowledge that I know you asked for both residential and commercial. As you can tell, this pulled quite a bit of time to take all this data and turn it into something digestible. So what I wanted to do was get this out in front of you from a residential perspective to make sure we're on the right track before the commercial's a lot more complicated because commercial could be zoned for XYZ, and we don't even really know which one is coming, whether it's a big box, warehouse, or if it's something else, depending on what the zoning really says. So we're going to develop that, and we'll do the best we can to project what that would be. But I wanted to make sure the format and the process that we've got going is correct, and then we'll bring that commercial back as soon as we get all that data captured.
Sure. So short answer, from my perspective, yes, you're on the right track.
Good.
Before I go any farther with that, let me again take an opportunity to say thank you.
Mm-hmm.
Thank you for everyone that put the work and the effort into this. I think this is absolutely on track with what we're looking for. Again, in my opinion, this simply goes to the point of how do we know what is appropriate? And going back to something that Councilor Patton mentioned earlier, best use. When we're asked to approve something, when we're asked to approve a project, sometimes it's almost as if we're making a decision almost in a vacuum, just looking at that project. For the broader scope and the good of the city, is it the right thing to do? This gives us perspective, additional perspective, that is, we've needed for a very long time. So I appreciate, I recognize there's been a lot of work that's gone into this. I appreciate that, all of you that have put this together. I do have a couple questions that I want to kind of dig into, but I wanted to be very clear from my perspective, this is a fantastic start. It really is.
Good, and I appreciate that, and I also appreciate the nudge, because this is good information that now that it's built, we can maintain it a whole lot easier and keep that data set going and growing as we continue down the road of the city. So thank you, and really thanks to these guys. I didn't have anything to do with this, so they've done a nice job.
Yeah.
I appreciate it.
I think it looks good. Before Scott asks his questions, just the one thing I would ask, and Caleb, you did a good job there, is, I like to see numbers, right? So just like extrapolate the numbers out with the existing and what's coming. That way I can just, it's just the way I function. So, I can see what those numbers are going to be. So just, Are you
asking per subdivision?
No. Like
Just a summary table that shows.
Yeah, like you had the pie chart, which was awesome. If you could see the existing numbers and just bring that down. I mean, sorry.
We can.
No, you're
We can
fine.
certainly do that, and people see things differently.
Yeah.
I'm like you, I need an
Yeah.
Excel sheet, basically. But there's others that like the graph, so we can add another slide that includes the summary. I think that's pretty easy.
That's kind of where I was going,
Oh,
actually.
sorry.
I mean, not necessarily to that extent, but, or exactly to that point, I should say. Obviously, you've compiled a lot of information here. What I would like to see, if possible, without, creating a whole lot of extra work, again, I think what you've got here is fantastic. I don't want to minimize that. I want to make sure you understand that I do appreciate this. What I'd like to see, if we can, and just kind of throw together, obviously you've pulled information from all the different PUDs that are out there. I'm just thinking about other issues that we face with, as far as city council are concerned. I would like to see out of those PUDs, if obviously you've got the date that they were approved and that type of thing. If you could include that information so that we can then take a look at the information and determine, okay, out of these, how many of these were 7 years or older, 10 years or older? How many are still out there, and how long have they been sitting out there? I think that would be beneficial as well. Just a quick chart with that type of information might be very beneficial.
Yeah, that's doable. Just quick clarification. Would you like that also in regards to PUD amendments? Because some amendments may add additional units or take away.
I appreciate you saying that. I actually made a note here to make sure that I asked that question, and I didn't look at my notes. So,
Okay,
yes,
all right,
thank you.
all right.
That's one of the things that we've done here of late. Some of the PUDs that have been approved by council, they were to reduce the number of homes yeah, I would like that. So if there are, if it's possible, the original PUD with a number that was approved, and then if it's since been adjusted, maybe that date and what that new number is.
Sure.
That would be great.
Yep.
I think one of the things we're going to have to be careful of is it seems like it's easier to build new than it is to maintain old. And the more tax relief, well, what do you call it, tax abatement that we give, the more it makes it hard to maintain the old, which we must do. And we're going to have to be keenly aware of what direction we're doing and making sure we're giving abatement only to those things that we really desire, instead of, well, I don't want to say what, but.
No, I
because
think
I'm
it's
not-
good. This should help.
I'm not, but we're going to, and
understand
it affects the school and affects everybody.
Yes.
And we have to be careful that we don't have growth that we cannot maintain.
I think that's an outstanding
Yeah.
point, because again, not only, I mentioned this earlier from the perspective of council, we're, trying to make the best decision with not necessarily all the information. This is certainly a huge step in the right direction as far as better information, but it doesn't just impact the 7 people that are up here voting. It impacts our first responders. It impacts how do our schools plan. And the better we can coordinate that, the better we're going to maintain and continue to have a city that everybody wants to, everybody's proud of and wants to be a part of.
Yep. Totally agree. Awesome. Thanks, guys. I mean, we're gonna keep going on that, right? I mean, yeah. Okay. Let's move to the next thing, is the discussion of the streetscape costs, the good, better, best, item that we had. So this is really, I just want to kind of open up this discussion. I was unable to go to the joint city council and APC meeting that we had. But one of the things that I recognized that I did not hear from in that meeting is they initially had told us, we had the $350,000 number. Then they said, hey, for $1 million, we can get something really nice, right? And we had this, and in fact, they referenced good, better, best, right? Well, now, from what I'm hearing, it's $5 to $6 million. First of all, I heard $5 million when I went to the presentation over at the Grand Park Event Center. Now I'm hearing $5 to $6 million, and it's just, this is the best. There is no good, better, best. I mean, and I appreciate all the work that those folks have done. But frankly, I have a couple of issues with it. Number one, the art. as I went up, and one of our past city councilors was in front of the arch, I said, so is this the art? He said, I just want to know, are you guys going to pass this or not? And here's what I would say to that person and anybody else who wants to put $1 million worth of art. We've got first responders that could probably use $1 million before that. We have Board of Public Works that could use $1 million. If somebody wants a big piece of art, pony up the cash, put your name on it, and stick it in a freaking roundabout, right? And I mean, I hate to be so direct on that. Is that pretty direct?
It was relatively direct.
Okay. But, I mean, gee, many Christmas, man. I mean, all I did was ask about it. Ask about the art, and I mean, that's the response I get. I'm like, if that's our response, we've got a communication problem. I mean, again, I was thinking this good, better, best. I haven't seen it. So
I think we're going to have to come to a little reality on this, because if you look at the increase in cost in just the street construction, that's a 46% increase in cost over the original projection of 15 million, which is a 7.5 million, our part. If that increases, that puts a lot of squeeze on us, and I would assume these other things would increase about the same. I don't know that for sure, but at the end of the day, the state of Indiana owns that road. We don't. We kind of dolled it up, and I just think we have to really put our thinking caps on about what is appropriate for that. I'm a believer. Maybe I originated the let's do the best we can, or let's make it good as we can.
So it's your fault.
It's my fault. I'll accept the blame. But you only have one chance to do this in a long time, and it's depressing to see cost escalate like that, probably just because it's a public project. I mean, that seems to be where the greatest escalation in cost comes. And I don't know if other communities are experiencing this, and I assume they are. There's going to be, some things that won't be done right away in a lot of places. So we'll just have to see.
So a couple comments on that. The 46%, I think, is what you mentioned for State Road 32. A large portion of that was land costs. So you won't see that translation
Hope that slows down.
into this. There's no additional land that is being required for this. As far as the good, better, best, those do exist, and I'll apologize. This is kind of being driven by a different group, but not the city. So I don't have all those specific details. I can tell you that I have seen different versions. Why they weren't presented, I don't know. But I'll to help understand. So essentially, the best is what was presented. The good is a much scaled down version, so a lot less amenities and pavers and things like that. And then the better is kind of in between. But the concept stays the same. It just gets reduced in scale and the magnitude of what we do.
I think Kristen has done a good job.
Kristen has done a good job.
I'm not trying to minimize what they've done. I'm just, it's a little disheartening to.
And maybe when it comes to council to decide, those options can be there. And I'll talk to Kristen.
Well, I mean, is what I equate it to is it's like, I say, hey, Jeremy, you came to me and you want to build a house, right? And I say, Jeremy, it's going to cost $10 million, right? And then you start talking about it and we say, but that $5 million looks a lot better, right?
Sure.
It's like you're setting me up to bring me down, right? And to a more, because now maybe I'm more willing to accept a $2 million fee when initially it was pitched to us that the best was about $1 million. So I start at $6 million. I mean, it's like I'm at the used car sales a lot, and they're telling me, hey, I can get you in this car for $20,000, but I got this other car over here, it's $10,000. It's a lot better.
And I guess the last part, the art that you saw in those renderings is not real. So that's not part of this cost of the project. Art would come later, other than, and John can probably speak better, other than whatever's being done for the historic mitigation as part of 32, which I think will land in one of the roundabouts. Is that true? Both of them. So as a requirement of the project, there will be some form of historic art in both those roundabouts,
You know,
which is not what you saw in those.
If we want to do some kind of art, why not work with the schools and have someone who's a resident of Westfield and have them design some art? We take it to somewhere. It costs maybe $20,000 to get something done. We get somebody's name on there that's actually a Westfield resident as opposed to, I don't know.
I think,
Somebody
I think
else.
our views are in line on that.
Yeah. I mean, yeah.
But
I was gonna say something else.
this building the road's like building a house. Once you start, you're strapped to it, pretty much. I mean, you could quit, but it leaves you in a bad position. So once we start building the road, we're strapped to it.
Oh, yeah, yeah. We're experiencing that with 191st Street right now.
Okay.
I just want to emphasize again, the point's been made. I think the group's doing a great job gathering the information, putting everything together. This is not about, beating anybody up or anything like that, and it's not about, oh my goodness, are we going to do this? Aren't we going to do this? I absolutely think that, to Joe's point, we've got an opportunity, one opportunity to do this. We've got to do it right. But at the same time, we've got to follow that with, we have to do this right, but we're not going to do it without the understanding of, financial responsibility as well. And to go to a point that was made again earlier in our meeting this morning, there's a $6 million loan out there, if we know where all of our nickels and dimes are, sometimes it helps make decisions a little bit easier.
Yeah.
So, everything, this is kind of a small topic, I guess, but it's a big scale conversation.
Right. Yeah.
East 203rd Street. I am not at all, by asking this question, attempting to throw a monkey wrench into anything. I think the plans that have been laid, not just for streetscape, but even the 4-lane road with turns, everybody's been working really collaboratively and in a cohesive way lately. But I'd like to ask, because I simply do not know the answer. When the initial interlocal agreement was entered into, it was a 50-50 split. My understanding was, to some degree, so that we could get what we wanted in order to control that. And we've paid an awful lot of money over the years, millions of dollars between Structure Point and working with NDOT to make sure that the city and the community gets exactly what they want out of the project. But because it has changed so much in budget, I would like to know if there can be a conversation with NDOT about going back to what is traditionally their split at 80-20 without derailing it. That way they would absorb these costs. So I don't know if we're still in a legal agreement. Thanks.
Okay.
I just wanted to address the 80-20 comment. 80-20 is a part of our federal grant process. So when the Indianapolis MPO gives us money for a project, 161st and Union roundabout's a prime example. The agreement that we reached with the MPO is that Federal Highway is giving money to the city of Westfield via the MPO for construction and construction inspection. They're giving 80% of that project cost to the city. The city has to put up 20% match for that grant. That is specific to the MPO. It is not an NDOT standard necessarily. It is part of the federal funding process. So I think there's some confusion about how NDOT operates relative, because NDOT does oversee some of these projects. I think there's some confusion about NDOT standard funding mechanisms versus how this is being funded.
Okay.
I mean, at this point, we've already gone through the state process. I don't see any reason why we delay the project another 2 or 3 years to go through the federal process at this point.
Okay. Anybody else? Okay. Let's talk about the,
And to that point, even if we did go back to the federal process, it's still a 50-50 split with NDOT.
okay, yeah. Okay. Let's talk about next thing, or last thing here, unless somebody else has something else. Let's talk about the third-party audit, second-class city, pros and cons. Number one, so the third-party audit, as I alluded to in the one council meeting, I met with Ryan Watson and Rebecca Ogle. We talked about the third-party audit. And just so you know, I mean, initially, you know, when I think was even running, and when I first came on, I said, hey, you know, we should have a third-party audit. I was really not really opposed to a second-class city. I wanted to understand, but frankly, I didn't want to give, I wanted to make sure we had a proper system of checks and balances. Since becoming a city council member, I'm happy to admit, and maybe some people will relish in it, I was absolutely wrong. You know, it is what it is. My wife tells me I'm wrong daily. It's okay. When I look at the city, and we talk about the second-class city, and we had one gentleman come up and say, you know, it'll be more representation, and you know, you guys will have more time to be home with your families, and you know, and this sort of thing. Before I even address that, I would say this: the third-party audit would be the verification process of the city's financials. And one reason why I wanted it is because the state of Indiana was somewhat behind. But the reality is, as I've gotten through the financials, and I will give Cindy credit for this, and I mean, I'm not saying that there's not questions about, hey, allocating this here or there. The financials are what they are, and frankly, I can understand them. I mean, and I have no problem with that. And in fact, I would be very skeptical of having the person that's managing the financials making all the decisions and having monies go here, there, allocating whatever. The other piece of that is the State Board of Accounts. Actually, I like the fact that they come in and say what's right and what's wrong. I don't want a third party. I was an auditor, by the way, for years, and just at E&Y, and we had other clients as well. I don't want to just come in and, you know, you trust but verify. The fact is, though, there's a materiality. Hey, this could be wrong, but it's generally accurate. The State Board of Accounts would then interview that third-party auditor for information of what they've seen is maybe subjective or accurate or not. But the problem is, it would preclude us from having the State Board of Accounts come in and say, this is being done correctly or not correctly. And they would not be making that first pass of judgment. And frankly, if anybody has seen what's gone on here over the last several years, and I am going to be somewhat, you know, controversial here, the State Board of Accounts has written us up because we've done a lot of things incorrectly. It's factual. And now we can have one side argue, well, we think it is accurate. That's exactly why I don't want the third-party auditor. I want the State Board of Accounts to come in and say what we are or aren't doing accurately or inaccurately. The second part of that, and actually I'm going to, if the Finance Committee thinks this is appropriate, that we should even address that resolution ordinance that we passed on that audit and actually get rid of that resolution or ordinance, but I think it's something we all need to talk about.
I think that's basically up to the audit committee. I mean, that's kind of your purvey.
Yeah, but that's just our opinion, or you know, or like if it's my opinion, it really needs to probably be a.
We will need to act on that.
Yeah.
One way or the other, I believe.
Yeah. The other piece of it is you said, you know, well, if we go to a second-class city, and don't get me wrong, if I was the mayor, I'd love to have my own CFO, no offense, and I can direct everything, right? But the system of checks and balances, I think we've shown in this city that clearly we need it, and this is taxpayer money. And the system of checks and balances is of utmost importance and actually should be the most important topic of the day. Whether we go from 7 city councilors to 9 city councilors, and we say, well, you have more representation. Maybe not, because actually that comment, I mean, it's actually fraught with errors. If there's 7 city councilors, and I have my city councilor, and I'm representing a certain area, and now there's 9, but I still have my one city councilor that I'm going to, you just got watered down, pal. I mean, that's the bottom line. I mean, that whole argument was actually ridiculous. I mean, I sat there and listened to it. I mean, I just thought, man, this makes no sense at all. I mean, so I just want to talk about this because people keep asking. We have people writing letters to the editor in support of the second-class city when they really don't even know what it means. All it means is more cost to the city, and frankly, your vote would be watered down. That's actually exactly what it means. It would be more control for the mayor and administration. Frankly, I'm not for that. I want the system of checks and balances. Gentlemen?
No, I would just add, I agree with most everything you said there. I think the checks and balances is certainly not only appropriate, it's warranted. The other thing that I would add to that just a little bit is we qualify, we're able to. It doesn't mean we have to. Right? And just because maybe we elect not to do that now, doesn't mean that somewhere down the road, we can't decide, okay, now it's time. Now, again, this kind of goes back to the last conversation we had about who are we as a city, how large are we going to be? If we continue to grow and things are not, kept at a smaller scale, maybe at some point in the future, it might be the right time. Again, all of those things are interlinked, but just because we all of a sudden now we can qualify doesn't mean that that's the right decision. And as far as checks and balances, again, I think we spent hundreds of thousands of dollars to determine that we needed to communicate better and have some oversight and things like that. So I think it's almost comical to suggest it. And I have still not been able to wrap my mind around the comment of better representation. I think you said it very well. It waters down the representation, if nothing else.
I just to kind of point out, if you look at, whenever people say other governments are doing this, I mean, folks, look around. The government is not, we are the most inefficient allocators of capital possible, guaranteed. I mean, if that wasn't the case, why could one person build a bridge for $1.5 million and another one can't build it for $7 million? I mean, just things like that, right? I mean, it's just like we are terribly inefficient at allocating capital. And the problem is, it's actually the people's capital that we just don't understand. And I think we forget that from time to time. And so, Joe?
It's something we shouldn't forget. I was kind of leaning toward the second-class city, and then, the more you see of how things work, the more you think perhaps third class not too bad. And
if there was a fourth, I might throw her hat in for that.
yeah, but there might be. Maybe go back to being a town. Merrillville is a lot larger than us in their town.
Yeah.
So I don't know. I really think that we're getting the cooperation now that we haven't received since I've been a town board member or a city council member. And it's refreshing to see that. And
Jeremy's done a good job on that.
And there's no reason it couldn't have been done before, really, when you think about it. And
we can have this operating as a third-class city, but be operating efficiently, or at least more efficiently and more in tune. Having a finance committee, for instance. I mean, just doing things like this. Anyways, that's...
Well, that wasn't even welcomed at one time, but it is welcome now, I think, and it's achieved the correct purpose in front of the people, and that's what they want. They just want to know what's going on.
Right. Yeah.
So do we.
Yeah. All right. That's all I have, unless somebody else has any comments or anything else they want to add, but that's it. Thank you. I know it was a long meeting today, and this is our best turnout yet. So, wow. Doesn't mean we said anything of value, just best turnout yet. So, all right. Thanks everybody.
Good job.